made some did some trades late last night, early into this morning, and pretty much severe when I started trading the spot gold. Can you see it here? Alright, so we started trading the spot gold on, let's say, 8th of August. Okay. So that would be 8th of August would be last week. Last week, the 8th of August. Let me see what I'm seeing here. No, the 10th. Sorry, that's the 10th of August. Pretty much started trading which was Monday. Right, we started with a balance of about, I think it was about $350 or thereabout at the time, right? And or $314 because I mean I'm actually in the process of getting my account funded, and I want it to be realistic as possible and see how it is that replicate the conditions to see how it is that I could actually what I need to do to increase this thing, get the money, get the turning over, of course by trading, right? And when I checked out the markets, not a lot of movement happening in terms of the USD. Right? Just not a lot of movement happening to USD. Or at least the type of movement that I would want to in terms of to get some serious trading going on. Right? Alright, so we look. Well, it's just not to my liking. It was very choppy, and the wicks are long, and it's just not my style of stuff. Right? So I'd get stopped out regularly in the market, and I just could not handle it. Right? Just couldn't handle it, and so although for years it was really the Euro USD which I was trading, I decided to, which as a trader I have to learn to be flexible, as I said in the last video. I decided to really explore and see what's happening, plus to see if there are any better options out there, and also to look and see if there are any volatile options that has liquidity, which sounds contradictory because generally the pairs that are volatile, which I put I think the top 4 pairs are volatile, should be here: New Zealand JPY, pound AUD, and it's Australia USD, and this one as well. And just to see the type of movements you're having in the market, right? And to see which one, if there are better opportunities in terms of trading style, and just to see, but what I realized doing all of this is that options, it's good to have options, right? So even though I was studiously a Euro USD trader, it's really good to have options because it means that you can actually search for a a very good setup, something that's convenient for yourself, right? So it's a lot more options. So while you're just focusing on one pair and you're sitting down for the right setup, which might not be coming for some time, and I don't know, I get a little bit jittery when I'm not seeing stuff happening. So it's good to really have wide options. So I took the time to just check around to see what's happening, and then I dipped into the spot gold market, right? And I found that to be pretty good, right? And so moving from call it 300, it's less than $350 to exactly at $1,000. Made a little bad trade this morning because I was waiting on this movement here, but to go. That's what I'm thinking that it's gonna go. But I mean, technically, this could be a retracement in terms of retracement, and then it continues up, or this is just a break for for continuation to go down, right? In terms of a bear market. But hey, wait and see. We have the indicators right here. Have a little patience and wait and see. So we are on this is a daily screen, and we are coming to basically the market is going to make a major decision in terms of direction, which way it's going to go, all right? And that's signified right here. The trend line in the ADX is still high, so it means that once it doesn't come down, once it crosses, it means that it's highly likely that we're going for another trend, whether bullish or bearish, right? My take on it is that it's going to be bullish, but hey, market is the king, and we'll always wait to see what's happening, right? As we said before in the previous video, spot gold pretty much setting new pathway at this time, right? So when you look at it, it set a record high, because what you find is that because of the whole the slowdown in the US market, in addition to the corona or COVID-19, as we would otherwise know it as, a lot of persons have gone to gold, whether physical or in trading. A lot of persons have gone to gold, right? And so that's the situation. And so right, and so you'll see that things were really just ticking along, right? 2018, 2019, ticking along slowly. Last year it went up, but with the situation that's happening now, there has been a spike in 2020, right? So, excuse me, right? So everything that we're seeing here is a little bit new, but again, so there's nothing to really compare it against in terms of the past movement, in terms of would say points of resistance and so forth. However, just to trade this thing, we still apply the technical analysis and as we know, and then do our basic analysis of what is happening before entering the market, right? So pretty much this has been trending. Initially it was trending upwards. At that time, obviously, I wasn't in the market. So you always, of course, you start, you know, you can look monthly just to get an idea of what is happening, weekly, daily, right? So it's pretty much, you have to have an idea of the larger what's happening from a larger point time frame. So that will give you an idea where the market is going and what is just what's happening in your based on whatever you trade, whether you're a day trader or a scalper. Scalper, it's a little bit different, obviously, you know, but it gives you an idea of where the market is going to head. Right? So you have some sort of plan, and you're not, you know, you get tricked by you know, some little shadow movements or anything like that, right? All right. So, as I said before, we believe that more than likely it's going up. Again, the market is a king, so it could have a retracement, and it could continue in a bearish trend. So we always keep that in mind. But I do think it's highly likely that, you know, it's just a blip and then it will go. All right. All right. So it was really you saw the heavy retracement right there, heavy bearish move. You know, it wasn't going up little by little. This was just one drop, right? When you go down to the lower time frames, generally you start trading from the like you might have some movement. You trade from the 1 hour time frame to see when you are going to be entering. Right. Generally, we wait for compression of the candles and condensation of the market, and that's normally indicated by candles getting smaller. MACD line going straight, ADX line highly intertwined. Sometimes, if you look on the 1 hour time frame, you can literally see the candles highly compressed, right? And then so it's highly compressed and it's going across, so it's indication that there's going to be a big move coming up, right? And this is generally the market moves, so it gives you a little shadow moves out there, flashes, but it's actually going down, so you may get caught out by this going up, but you know, it's best to wait for that confirmation. It's going down. Utilizing the indicators that we have, right? We have our alligator. You wait until it's a bearish move you're expecting. You wait until it's under the alligator right here, and then you know, that helps you take away the noise, can go in, and if you think it's going to be a long move, obviously you would hold, right? The ADX as well, trend indicator is high, which is the green line right here, and the directional movement index are, you know, some distance apart, right? So if you look, it literally lines up, so you know it's a good time to enter and hold, right? So your MACD line basically deviating from the center, so that's all also. So, but it can be a situation where MACD line is going straight through, or from coming from top to bottom as well, right? Or it can be a situation as you see right here, it's on the 0.00 line and then it deviates down or deviates up, right? So those are all signs that it's a great time to enter. Alright, so as I said, one of the reasons we believe that more than likely it's going to be going up, we see our average the directional indicator right here. we see the blue line. Generally, once it's blue, that means it's going to be bullish sentiment. If it's red, as in this case right here, which is on top, bearish sentiment, right? However, again, the green line, which would indicate a strong trend, it has significantly come down. Alright, so we have to watch that. So it could be a situation where this thing is actually going to continue with a bearish sentiment. Alright, so we just have to be patient and keep looking at it. And so we expect that we expect some movement coming up. Alright, so we're not going to. I got caught by this flash a little bit earlier this morning, but we're going to be patient. Alright, so waiting until it clears there. You see some actual movement, and you wait. And you know this movement is really going to be big. This is, I mean, it's tight right here. Right, almost a straight line. Again, showing all the signs, tightly intertwined. Candlesticks are heavily condensed together, right? Heavily condensed, meaning it's not a long, you know, but not a long candlestick. So pretty much it's like you turn on a hose, turn on waters in a hose, but the hose pipe hasn't been turned on, but the pressure is very high. Alright, so you have that small hose and it wants to come out, and then once you turn on the top, it just bursts out in all directions, right? So that's the situation. You have to figure out the direction it's going, then you enter the market. Alright, so pretty much that's what we're waiting on at this time. We do expect a big movement. As I said before, the you know, you look on the length of the condensation, and so it's condensation going across to determine, to figure out if it's going to be a large movement, and normally it is. All right. So we have some condensation here, but as I said, when we looked at the daily, it's going to be a major decision which is going to be taken, which is right here. All right. So it's going to determine. So it's best we wait until it indicates, and not jump the gun like like what I did this morning. Right, so I did get caught out a little bit. Let's see right here. So I lost $48, about $285. I think it's either last night or early this morning, right? Which brought me up to a little bit over $1,000, and then this morning I lost $48, right? But thing with this spot gold is that it's a lot of movement, right? But it's pretty volatile, and when you, to give an idea of what is happening here, so I'm using, as I said before, 0.10 in terms of lot size. So that means for every 100 pips that I make, right? Every 100 pips that I am going to make, it means that the value of that is $10, right? You say, wow, how could you make any money from that? How we make money from that is this. Look at this right here. So we are in the, I think this is a 5 minute, right? 5 minute window. Look at this. Alright, so one move right here is almost 1,899, almost 900, right? So that is why you know, it is what it is. And I got the 285 pip right here. I think I started the trade somewhere about there, and that would be 2,850 pips, right? So I got it there about here, and then I came out of it, right? So I waited till the confirmation it was by this line of resistance right here, as you can see, entered, came out about here. Alright, so that's 2,000. So that is why even though the lot size is pretty small, you're still able to make a lot. So it means that if you start with, with a small amount, like as I said, I'm gonna be starting with $250 without taking any exceptional risk, but just trading as normal. Once you have a proper strategy, you can, even though this is extremely volatile, right, and expensive, once you set your risk, your lot size properly, right, and also you look at your risk reward ratio, you have everything set properly, then you can't go wrong here, right? So pretty much just having some patience with this trade that's coming up, and we see what happened. But this is just, as I said, a precursor to me actually trading and done with the talking and everything now. So we're gonna be doing actual trades, right? We're gonna be doing actual trades, and that's a thing. I think the only thing different would be commission. So there's no commissions being deducted from this, the demo and stuff like that. But it's going to be major once you have your strategy right, and your technical analysis and your risk reward ratios, and you're watching your money, tight stops, and try as much as possible just to follow our process. Then you're going to be good to go. All right, so let us see how this trade play out, and subscribe to the channel, guys. As I said before, we're back at it and going live. I'm hoping that it's going to be by the end of this week, so we can actually get some trading in, and while the market is ripe, we have some movements and so forth. So we can seize that opportunity. But peace out, guys, and remember, don't get, it's hard not to get tied up emotionally in the trading, but try not to. All right, and at the end of the day, don't risk, don't blow up your account, live to see another trade. So that's the key thing. All right, peace out.